Many of you guys have been asking for a video on casino stocks, including stocks like Wynn Resorts, MGM, Las Vegas Sands. So what I thought we'd do is do a comparison video here today to give you a better idea of where these companies sit both on a fundamental level and also when looking at their stock price if they're providing some good value here today. I will also share at the end of this video if I personally hold a position in one of these stocks. And if I do, how big my position is, and if not, if I do plan to purchase any of these stocks in the near future. So stick around to the end, it's going to be a fun video. But either way guys, drop a huge like on this video to support the channel. And if you want to see another video in this series, maybe hotel stocks that could be on sale right now, let me know in the comment section down below as well. So the casino industry, like some other industries out there, are literally among some of the hardest hit in the economy right now. And it makes sense if you think about it because they generate their revenue by having guests physically come into their properties, stay for a few nights, buy food, and of course, gamble. But right now, most cities are essentially shut down on lockdown, and these casinos are closed for business, and they are generating essentially no revenue. As a result, their stock prices have gotten absolutely demolished lately. Here's a view of the big four names and how their stock has performed over the last year. All are down significantly, however, Las Vegas Sands is the best of the bunch, only down 28%, and MGM is the worst of the bunch, down over 55%. So right off the bat, this should give you some sort of inkling that maybe Las Vegas Sands is the best of the bunch here and MGM is the worst. But let's run through the numbers and the fundamentals to figure that out for sure. So Las Vegas Sands is by far the biggest casino on this list here, and essentially this company dwarfs the other two casinos really. But what's interesting is that MGM actually employs more people. This alone gives me a feeling that MGM may not be as well managed and their expenses are naturally higher as well by having so many employees. But just remember this as we go through the fundamentals here, Las Vegas Sands is significantly larger than Wynn and MGM. So here's the valuation comparisons, and on a trailing basis, both MGM and Las Vegas Sands were at decent value. But on a forward basis, Las Vegas Sands is by far the cheapest stock. But, and a huge but here, these forward estimates are going to be incredibly inaccurate. The way these are calculated is that they actually are based on future projected forward earnings, but we know that earnings for at least this year for these companies is going to be poor, so these numbers are pretty much going to be invalid for 2020. However, what I will say is that this gives us a rough idea of what their valuations are like in a regular year, regular environment, and on that front, Las Vegas Sands is showing the best value. Looking at the growth for these businesses, we see that Las Vegas Sands is more or less flat with their revenue growth. Wynn actually had decline in revenue year over year, and MGM had some pretty nice growth here at nearly 10%. Looking forward, again, in a normal year, MGM is expected to be the best performer again. Now looking at their net income at the bottom, MGM also has the best growth here, with Wynn actually bringing in negative growth in the last year. So again, MGM seems like a good growth play here. Las Vegas Sands is more of a stable, slow mover, and Wynn really seems to be struggling. The revenue here surprised me quite a bit because based on the data we saw, like the market cap, I was expecting Las Vegas Sands to be much larger here. But the reality is that both MGM and Las Vegas Sands brings in around $13 billion in revenue, with Wynn bringing in about half as much. Net income for both companies is also comparable at around 2 to 2.5 billion, very strong in my opinion. And again, Wynn is the laggard here with only $122 million of income. So this is quite interesting to me. It seems that with MGM, you're getting similar earnings versus Las Vegas Sands, but the stock is down significantly more. Wynn is the outlier here, and their numbers aren't impressive to me, honestly, which gives a bit more justification to the drop that they've seen, in my opinion. Now, the balance sheet here, in my opinion, really helps clear up the picture for us and somewhat justifies the stock price movement we've seen. Las Vegas Sands has $4.23 billion in cash, whereas both Wynn and MGM hold around $2.3 billion in cash, about half as much as Las Vegas Sands. Long-term debt for all three companies are fairly similar, ranging from 10 to 15 billion, but the good news here is that none of them have any short-term debt due, which would have been detrimental to them at this point. So this is good to see, and their cash flows are also pretty good. If you take the net operating cash flow and subtract the capital expenditures from that, you will come out with the free cash flow for these businesses. So just doing some quick math here, Las Vegas Sands has roughly $1.82 billion free cash flow. Wynn with around negative $159 million free cash flow, and MGM with around positive $1.07 billion free cash flow. So once again, looking at this metric, Las Vegas Sands and MGM look good, but Wynn concerns me here with negative free cash flow. This means they are losing money after all is said and done versus MGM and Las Vegas Sands that earns more money after all is said and done. So this got me really curious to see if this was just an off year for Wynn. So I took at their free cash flow historically, and I was not happy with what I saw. Free cash flow was literally all over the place, with 9 out of the last 15 years having negative free cash flow. So it's safe to say that their free cash flow tends to be negative more than positive. And I personally like a business with my investments that has consistent positive free cash flow, as I find the company has a lot more stability that way, and they have a lot more flexibility as well when they are generating good positive free cash flow. And now just for comparison's sake, here's what MGM's free cash flow looks like. Still has some negative years, but this coincides with the US economy slowdowns. But for the most part, in good economic years, the company has good free cash flows. Las Vegas Sands here has good free cash flows as well. Ever since they came out of the last recession, this company has held up very strong and posted positive free cash flow returns every single year. I personally like this sort of strength, especially in somewhat of a cyclical industry like casinos. So all these businesses do look pretty decent on a fundamental level here. They have a good amount of cash, at least 2 of them does, and they have a good amount of money coming in, at least 2 of them does. So as a result, as of today, these companies do pay out dividends as well. But honestly guys, just between you and me, I believe this is going to be cut very, very soon. Either way, here we can see Las Vegas Sands has the best dividend yield with 7.27% and 8 years of growth, whereas MGM and Wynn also pay out a good dividend, but only 2 years of growth. This is probably because their financial position isn't nearly as strong as Las Vegas Sands is, but nonetheless, the big red flag here is that all of them have a payout ratio over 100%, with Wynn paying out over 200%, and I believe this is calculated using last year's earnings. So just imagine how high this payout ratio is going to be after this year's earnings comes in and is much, much lower than last year. And that's why I think it's more or less expected that their dividends get cut from these casinos. So in my opinion, do not buy these stocks just for their dividends, because if I was a betting man here and if this was a bet, I would say it's more likely that these companies cut their dividends than not cut them. So now that we've kind of gone through the big 3 players in this space for casino stocks, I want to spend some time here to discuss if I think that these companies and this industry as a whole is a good investment. See, I see these casino stocks as a very cyclical industry. In a good economy, they tend to do really well, and in a bad economy, they tend to do really bad. And right now, the economy is struggling. Businesses are pretty much closed, cities are pretty much closed, and as a result, these casinos have to be closed as well. So they're really taking a big hit right now. And I do believe that both Las Vegas Sands and Wynn Resorts have a good presence in Macau, China as well. But Macau isn't doing that great right now either, so I don't expect a lot of revenue to come in, if any, really from those properties as well. So I really think that this industry is going to take some time to recover, but the problem is we need to have people starting to travel once again, take flights once again, for things to actually start picking up for this industry. As we know, a lot of people are not traveling right now, and they probably won't be traveling in the near future. I'm talking like 6 to 8 months, maybe even 12 months, because there's still a lot of fear out there and a lot of regulations right now with countries not allowing certain other countries to fly to and from. So there's just a lot of issues right now with flying, and until that's cleared out, this is going to be one more hurdle that these companies have to overtake. Also, another problem that I see is that even once flying picks up again, some people are still going to be too afraid to get on a plane. Maybe they think, what if this outbreak comes back again and there's another issue and they can't fly back home? So I think it's going to be at least a couple of years before a lot of these industries actually fully recover to where they were at, say, last year. So with that kind of thinking in mind, I would say that if you have a long-term outlook, maybe 5-10 years or more, these stocks may be looking very attractive right now. But on the flip side, if your outlook is fairly short, maybe like 3 years or less, this may not be a good investment, because I don't know if these companies have a good opportunity ahead of them to recover in that time period. That being said, the big question I'm sure you guys have for me is, am I planning to buy any of these stocks, and do I hold any of these stocks currently? So the answer to do I hold any of these stocks currently is no. But in terms of am I planning to buy any of them, I am looking more into these stocks. I'm not 100% convinced if I actually do want to own one of these stocks, or maybe one of the airline stocks, or maybe one of the hotel stocks. So I'm looking more into those companies. I'm not made a decision on that yet. But as it stands today, I'd be looking more towards either Las Vegas Sands or MGM because I believe their fundamentals are good. But Wynn Resorts is not one that I would consider. Now, I have held Wynn Resorts in the past when it was a much stronger company. I believe it was in 2017 or so, and I made some good gains on that company. So I love the stock, I love the company. But as it stands right now, looking at their fundamentals, not a huge fan. But anyways, if you guys want to see a follow-up video if I do purchase any of these casino stocks, let me know in the comments section down below as well. Now, I also know that a lot of you own Wynn Resorts stock. So if this video kind of influenced you a little bit, or maybe got you thinking a little bit on your investment, or maybe it convinced you to buy one of these other stocks, let me know in the comment section down below. Remember, you got to do your own research though before you make any investment decisions. I'm not a licensed advisor here. I'm just giving you information. But either way, let me know your comments and thoughts in the comment section down below. Share it with the community, and I'm sure you're going to get a lot of insight if you have any questions down there. Guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.